Welcome to Trading Lounge and the US stocks for the 27th of May. We're going to be covering Microsoft, AMD and Tesla. But I would like to start with the NASDAQ first because there is a possibility that we've got a top in place here. We'll need to gather a little bit more evidence, but what we have been doing is counting 5 waves to the upside here, and I understand that this 5-wave structure here has got overlapping wave structures in this area through here, so that causes a bit of a problem. But on the S&P 500 it travels quite nicely as 5 waves up through here, so it's a flag. We've got to put a flag on that. But yeah, so then we've been counting from this structure here up to here for 5 waves here. On the S&P it looks like we've got another little top to make, but on this market it appears that we can have the 5 waves in place here. And if I go to the tick chart and look at this top here, it does appear that we've got the first 5 waves down here as well. This is obviously important. I mean, picking the top of the market, is a fool's game, so we need to gather evidence for that, but at the same time we still need to discuss it, and we can quite easily be wrong or right with all of this, but let's work through that here. So this is the current top here at 9.6, and I was just looking here at the top here of 1 and 2 here, and then a little 5 waves down here for 1 and 2, and then 1 and 2 and 3 and 4 and 5 to the 3rd wave, 4th wave, and in here for little 5 waves down in here, then wave 4 here. I just double check that. It looks pretty good to me, but near enough there. So that's pretty much on the 38.2, so that's about right. And then wave 5 down here, so we should see a little rally back into the 50-60% retracement level here as an ABC pattern. So maybe I can just label that here for the time being. I mean, the main point here, or the takeaway here, is that obviously if this market is going to end up moving lower from here, then it's likely that it's going to place a lot of pressure on certain stocks within the NASDAQ section. So this is why I wanted to start with this. So here an A and a B and a C here, and then what we would need to see after that is we'd need to see a new low from that point. Okay, and then that would help confirm that. So you should be able to observe this occurring here and then a new low here for that. So that will be quite helpful, I think. Let's have a look at Microsoft. So Microsoft here on the daily chart, we've been also counting 5 waves up here, from wave 4 here in terms of 1 and 2 and 3 and 4 here, and it's a bit of a dog's breath here, but we'll go through that again in a moment. But this is where we left it last week. We were looking for a top here and then pulling back down here in line with the with the NASDAQ. So let's just sort of drill in here and pull this apart a little bit. So yeah, look, 1 and 2 and 3 and 4 here, and then after a fair bit of work of pulling all this apart, 1 and 2 here, 1 and 2 and 3 and 4 and 5 and 3, back for 4 here, pretty close of overlapping there, so that does cause a bit of a problem. A bit of a problem, but I'll bear that in mind. And then we were looking for 5 waves up into this structure here. So it is possible that we've got 1 and 2 here, and then 3 here and back for 4 here, and have one more move to the upside here, or we can have a top in place. So we need to figure that out. But the thing about this, I can count in 5 waves here on a tick chart to here, but it doesn't really give us a nice new high across here in this instance here. So that's a little bit of a problem. But this here too, as a 38.2% retracement level, so if we consider this wave 1 here and 2 here, And let's just imagine that this move up here is wave 3 there to the top there. The wave 4 here is pulled back to the 50% here. So this is the 50-60% retracement level here. So any move really below this, it's okay for wave 4 to move back to the 50% rather than 40%. That's okay. But any lower than that, then would call that top in play here, okay? So if this moves down through the 80 here, if it comes down here, it's going to get support on the 180 and also the 61.8%. So there will be some sort of corrective rally here. And then if this drops through here and pulls back up to this point, that low there is critical for any move to the downside of that point, okay? If this is going to push up through here, then if this just comes down, finishes coming down through and moves up through here, then you can go long at that point here, and then you'd go up to 188 here. So as a level here, we would have, well, from 80 we would have 1, 2 and 3 that make up group 1. So support on top of group 1 would give us the long trade. 5 would be there as well. There will be consolidation at 185, and eventually that would become support, and then you would see profit taking coming in at 180, 188. Wherever you see an 8, then you'll see the bids being hit there. So that would be your target to the upside if that was going to be the case. So that's how you'd handle the long side. This is how you'd handle the short side here. I mean, it's just good to understand both sides of it, you know. I mean, all we're looking for is to make a bit of pocket money. So in pulling this apart here, I have to say, these counting some of these waves in stocks is in these particular stocks is not easy. Sometimes it is, sometimes it's not. I mean, I can see here we got 1 and 2 and 3 and 4. I can see we've got overlapping wave structures here, but I still have to call that in as 1 and 2 here. And then I was thinking here as 1 and 2 here, 1 and 2 and 3 with 5 waves in this section here for 3, 4, 5 here for the third, 4th here, 5th here for the third at the top there, and all this across here for the 4th, leaving me 5 waves in this little space here for that. And then this down here is wave A or wave 1, back for wave B here at 185. I don't particularly like spikes so much, but anyway, it's there, so we'll use that. For wave 2 or B, and then wave C moving down here. So as I mentioned, we've got 1, 2, 3, 4, 5. I mean, do we include that spike as 1 and 2 here, and 3 here, and 4 here, and 5 here? I'm not quite sure. I just don't like spikes, and they'll show up on some platforms and not others. That's the problem with them, you know. So yeah, a little bit difficult to count this here, but this being the, you know, as a wave 4, it should just move down to, you know, this area here, the 182, and then bounce back up, find support on here, and then move up. So as I mentioned before, we can go long on this top here, and so on. But there's probably more downside because it looks like it's 1 and 2 and 3 and 4 here. Still got further to go down, but there will be support into this. So you really just want to be shorting under the 180 here for that. Alrighty, let's move on and have a look. Let's just go back and recap this a little bit here, just to so we walk away a little bit clearer here. So we've been looking at this as 1, 2, 3, 4, 5 to the upside here. I'm concerned about this 5th wave here because it hasn't really made a new high here, but the Nasdaq can pull it down from that point. Is it possible that all this up here is just you know, wave 1 here coming back to wave 2 in this instance here at the 61.8% mark, and then going up there for 3, 4 and 5 and going up to the $200 mark? Is that possible? Yeah, sure, anything's possible. And if that's the case, we know where to go long at. The reason is that in this structure here, there's got to be sort of equality within it. So we know wave 3 is the longest in this structure, and wave 1 here is quite short. So wave 1 and wave 5 will be roughly the same, depending how deep wave 4 goes, of course. So it's pulled down quite deeply here. So it's kind of got the right look and feel about it here. but anything can kind of happen, and we need to be prepared for that. And like I said, if the 180 becomes the resistance, we know what to do at that point. Okay, so we're going to have a look at AMD next. Okie dokie, so this is AMD on the daily chart here. So we've got this move down through here in 3 waves, so we know it's corrective. So we know at some point this top's going to be taken out. We also know too that this particular move down through here, this thing here, you can see that it's in 3 waves here. So that's corrective. So we also know too that bullish corrective. So we know that that top will be taken out after a while. I've counted this up as 1 and 2 here, and looking at this as 3 here. And we're looking at this last time we spoke here, if you remember, we're looking at this as wave 4 here, and that could still be the case, but I'm liking more and more triangle pattern through here. So let's go in and have a look at that. So while the other markets are correcting, I'm expecting this market to be under pressure but move sideways. So on the 4-hour chart, we can start to look at the triangle pattern like this here. I know I've got 3 waves here, as I mentioned before, so that makes it bullish corrective. And if it's going to be a triangle, it's going to be an A wave to here, a B wave to here, a C wave to here, a D wave. Let's just draw that out, shall we? So this can move down to the 61.8% mark here, and this can move back up to the 61.8% mark here, and then this can move back down to the 61.8% mark here, and then move off from that particular point there. Normally there's if this is a triangle, if that's the case, then we've still got more to go here. But also too, there's normally I'm just trying to find the balance line here actually, and I can see that it's sitting around the 54. So what we'll do here, this won't be any good to us in the beginning here, but in the final stages, it will be just what we're looking for to base a trade off. So I'm just going to make it a little bit thicker actually. It's a bit dense. Yeah, look, all I'm looking for here was the balance line through here, because we can see the market. So roughly what I'm saying is, from that low to that high there, that's visually I'm just doing is 54 is about the 50% mark here. So we've got some consolidation here. The market dropped through here, it consolidated here, didn't do much here, didn't do much here, did a little bit here. So I think what will happen over time is we'll be able to use that number there, the 54, to start building trades into. I'm going to go to the 1-hour chart here now. So the 1-hour chart here. See, first of all, here I can get an A and a B and a C wave. That's okay. Here I've got 3 waves here. I didn't want to force 5 waves into this, and then this one, and then this one here, and then we've got this one here. So if I've got this wrong, well then we can go long on, above this spike here as well. It would have to come straight up from that point though, like bounce off that. In fact, I'll just leave it for the time being. I'll keep an eye on it though. Actually, what I'll do is I'll just move it and then we'll adjust it later. So what I'll do is I'll move it to this high here. I know that's a long way away, but our aim will be to drop this down on top of the D wave here when that comes into place. I'll bring it down and bring it down and down and down. And we've got the 55 here. We want 55's playing out okay, but I'll just put it, you know what, I'll better just check this. So just roughly there to this low here. So it's close, just below the 54, okay? So that's it's going to be our balance line for this correction. And with all corrections, they're easier to find in triangles because it just makes sense, but in all corrections, you want to find where the balance is. So I'll put that on a straight line, and I won't thicken it this time. But what I will do is I will just darken it. That will be a better way to go about it. That will give it a bit more refined definition. So this will probably move down a little bit further. If I can just remove that there and remove that there, and we'll work this top in from here down to the 61.8% here. We'll grab this here and we'll look at, it's still quite low really here, isn't it, for that? I'll put it in there anyway. Get rid of that. So if this comes down to here, then we'll be looking for a move across this pattern here, and then this will be, it'll be something like that. I can move that down. It might move above the 61.8% because it's got a little bit of a habit. If we take this, I'm taking this top to this one here. See, that moved back up to the other fib number, the 78.6. So that probably moved higher than that. I mean, I just didn't feel right in terms of that. So we'll just move that up there, and we'll just have this here that it could come higher here to that space here. For that, we'll just leave those two there. Not that it matters so much, but we'll do our best to track that through there anyway. But we want to work through that before we push off to that long side there. So we'll nail that one right down in due course. I won't go to the tick chart, and I'm still having problems. I didn't check with the platform owners about why I wasn't really getting enough tick data in that. But something I need to do, but we're going to move on and have a look at Tesla now. Okay, so no real change with Tesla here, in that we're counting 5 waves to the upside on this daily chart, and we're looking for an ABC pattern to move back, an A wave, a B wave, and a C wave to move back into this space. So let's go in and have a look at that. And we also need to have a look in case we are wrong and need to be long. So so last week when we spoke, we were looking at this top, we were looking for this to be the A wave here, and looking for a B wave to move to the upside, and then a C wave down. In a sense, we had this top here last time we spoke as a place to go along on, but we're going to bring that across, and we're going to bring it down to this little high here, nestle it in there, just in there for that. And on the short side, we would need to see the market move down, come back up and bounce. That's a major trading level 8 here, and then we'd need to see the market move down through here and move back and then down. So we want that low here as our short position here on this. And as you may know, we look at the short side like this. If this is the 800 coming through here, we want that first move below the 800, and then we can get 2 variations of the move down. Look, 90% of the time the market will retest, and that's what we're looking for. So we're looking for a retest that could play out as an A and a B and a C wave here. And if that's the case, we have this low here to go long on, short under. We could also use this one here. We could also get one in quite close here. It's nice to get 3 trades sort of quite close together. This low here, because this is a corrective move in ABC and just in 3 waves here, if that's breached, then that confirms that we will be going lower than that one there. So that's kind of important at that stage. There is a variation on that, and it's this one here where we don't come back above the 800 here. It just moves down, but we still have these lows to go short on. We keep our stop above the 800, not on the 800. Otherwise you'll get stopped out a lot. Let's just go to the tick chart and have a little look at this further. So let me sort this out a little bit. Now that we've said that, I've got a count here for the long side here as well, because we're above the level. So in this case here, I probably will get in some more data. And we did speak about this last time here. I know this is a bit messy here, but you see the blue 1 and 2 here, and blue 3, 4 and 5 here. That's what we were looking at last time here, working through counting all of that. So we've counted that, and that gives us our 5 waves to the upside. And then I was looking for the ABC to move back down into this space here. This is the low here. You can count this down in 5 waves if you go 1 and 2 and 3 here, an A and a B and a C for wave 4, and then down here for wave 5. So wave 5 would play out here in terms of 1 and 2 and 3 and 4 and 5 here to this. So it's possible to have this as 5 waves down. It didn't make a new low below here. So, you know, it's very iffy, you know, it's not a clear picture. So counting it up to the upside here, if I take this low, I can go wave 1 here, and then an A and a B, and then use these 5 waves here for wave C here, not breaching the low here. So yeah, so I decided to go with that for the time being, but I'm aware of the other side of the situation, leaving this at 3, 4 and 5 here for 1, and then an A, B, C back here, an A and a B and a C. This is kind of a bit of a game changer, because on the long side, because this is in 3 waves here, unless all of this here is in 5 waves down to here, and then an A and a B and a C wave for this top here. So that works that way. But before we short this market, we need some evidence, and some evidence would be, we want that 800 as the resistance. And also too, as I point out with the indices a lot, we're working with this major level here. So that means we can use, when a market's vibrating, it uses group 1. I can't draw on that side, the tick chart, so I'll just draw on this side here. So this here as 10, 20 and 30, that makes up group 1. And then down here is group 2, so 65, 72 and 80 here. So when a market's vibrating at a number, and this could be 700, we'll still have group 1 there, or group 2 here. So it's simple. So basically, while the market's vibrating at a large number, group 1 and group 2 will hold it to that. Now, if top of group 1 becomes the support, a nice tested support, then the market's going to leave this number and start looking up to number 5 at that point. So we don't have the support here yet, and we don't have this as resistance here yet. And this in here I can see can be counted in different ways. So I just need to be a little bit careful. But in saying that, this particular move up through here, if we look at this as 1, ABC for 2, and this up for 1 and back for 2, so that means that if this top here goes out, then we can go long at that point. Otherwise, you have to wait for this to go short. So if we go back to the 4-hour chart here, that's why that's sitting there. And that's why that's sitting there. So we'll just chill, and we'll just work out what's going on. If you see it moving down here, then you'll still need to keep your stop out of the way. So let's just go back to the tick chart here, and I'll just look for, if you see this drifting lower through here, then let me just check on a few things. This looks like an impulse wave down here as 1 and 2 and 3 and 4 and 5 here. So we can use that to our advantage here. So that's the 50–60% retracement level. So any stops to the downside, if you wanted to short, I mean, I don't short into big numbers, so, but if you wanted to get in early here, then you'd need to keep the stop above here. If I had to go short right now, then you see how this is becoming the retested resistance here. The market came down, bounced back up, tested its levels here, and now it's dropping back here. But you see how it's stuck under the number 2 here. So that's a bit of a trigger here now to go to the short side here. But I wouldn't overdo it. And also too, once the number 2 becomes the resistance, then you can go for the add to here, and then add to and then add under here. That's the way that you can work with that. So yeah, if a new low is breached here, it means that the number 2 here, the 20, has been rejected. So the pressure is coming down from the top here. Yeah, we'll leave it at that. So just come back to the 4-hour chart and recap that. So above here for the long trades, below here for the short trades. If you want to create higher risk, because I just don't like shorting in front of, into big numbers. But it can be done. Doesn't mean it doesn't have to be done, but it's just higher risk. So we'll leave that at that point. So I'll put that up there and this here. So this is kind of what we're looking for in this regard. But I also understand too that we counted this up here as a 5-wave move here. So it's possible for this market to continue to the upside. I know that I don't have a very clear pathway for you. And I think it's best to state that and say that, and then just look for the trade setups. This market is going to leave the 800 at some point, and our job is to not to lose too much in the process of getting on that particular trend, whichever way that's going to go. Alrighty, thanks for tuning in, and thanks for the support. I really appreciate it. Cheers.